Friday.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil.
Hello guys and welcome to Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Just before I start today's video, anyone who's interested in joining my signal service, then please do not hesitate to visit my website, dailymarketmovements.com. I charge a very small joining fee of $29.99. So for the Nasdaq100 today, we have initiated the trading session by a small rally here going into the open. We're up only around 0.33%, so rather muted up until now. I made a very big and bold statement yesterday. For those who've been watching my videos for some time now, you will know that I've been dollar cost averaging into the Nasdaq100, selling. I actually commenced this process, opening my first trade just as we were up against that 50-day EMA. I added some more up around 13,000, and now I've just added my final batch during yesterday's trading session. This is on my leveraged account, where I can short the market, of course. And if we just go over onto my YouTube channel, you will see where I've put this statement. That was yesterday. I put today, the 3rd of the 8th, 2022, I'm calling the official top of this bear market rally. The S&P 500 and Nasdaq 100 look like great shorts here. I've just sold. Have a great evening. So that was a very bold statement for me to do yesterday on the 3rd of August, 2022, as I really do believe this bear market rally is going to come to an end. And I just fear for many of my viewers here on YouTube who've been watching my videos, commenting, saying, Max, you've got this completely wrong. And I just feel that many of my viewers have been sucked into just seeing this movement here. You must be looking at the chart on a 1 hour, 4 hour time period, maybe even less, and all you're seeing is this nice uptrend. If we just go and have a nice zoom in, sure, we are in a very nice looking uptrend here, but this is where the problem is. And as the old saying goes, if in doubt, zoom out. And all you have to do is look on the daily chart pattern to see that we are still in a clear downtrend here. And that's what I care about the most. Providing that we continue to trade below the 200-day EMA, we are still in a downtrend. And I don't think the fundamentals have got any better. In fact, I think they've even got worse since the beginning of the year. So I do personally believe that we are going to see a continuation of a move towards the downside. The fundamentals, especially in the past week or so, have continued to get worse with that second negative GDP reading. What's happening in Taiwan, for example, we got the news that energy costs are actually going to cost nearly double the amount of what analysts were initially anticipating. So I just think it's just a matter of time now until we do see a rollover back towards the downside. And again, it comes back to this chart. This is by far one of my favorite charts of the year. And this just shows the bear market rally that occurred in 1929 and 1932. And for those, by the way, who are new to my YouTube channel, you should know that the average duration of a bear market is 18 months. For the Nasdaq 100, we've only been in a bear market for 6-7 months now. 6 or 7 months, where the average bear market lasts for 18 months. Okay, and look what happens during these bear markets. We have, on several occasions, some nice rallies. And at this moment in time, we're up around 20%, which looks very similar to this bear market rally that occurred here back in 1931. But eventually, it does lead to a lower low and a lower high. And I think that's exactly what we are going to see here for the Nasdaq 100, for the S&P 500, as I do not see us breaking out. I think what's happened here is that the market is predicting a bad jobs number, which of course is good news. At this moment in time, we're trading in an environment where good news is bad news and bad news is good news. So I think that traders have kind of looked ahead to the jobs number and are expecting the number to come in a bit softer than anticipated. And what we could be leading up for going into tomorrow's trading session is, the typical buy the rumor, sell the news type of scenario where, typically it would be good news where you'd expect the market to rally, where, it might already be priced in and we could see a rollover and some profit taken here. That's what, I think you should be cautious of here. Is that this is typically where the institutions start to take profits and kind of persuade the retail traders to invest. And even if we were to look on the Nasdaq 100, for example, you could argue that we're trading in this nice uptrend. If I just bring that down ever so slightly, this is kind of the uptrend that we're kind of trading in at this moment in time. even within this uptrend, we're still overbought at this moment in time. I'm just going to go ahead and bring up the RSI. Let's just bring that up. Let's just see where we're currently sitting on this RSI. I'll just delete one of them. We are approaching that overbought territory. So are we going to have enough legs to break above the 200-day EMA, break above the 0.5 February when the RSI is just at this moment in time sitting at around 68.43? We're already overbought within the uptrend, the short-term uptrend that we currently find ourselves trading in. We're rubbing against the top side of this downtrend. I personally don't believe so. I think that we do come back. Even if you do not agree with my bias that we're going back to fresh lows, the market is telling you that it has to pull back at least 5 to 10%. Just so that it can correct itself on the RSI. So I am not a buyer here. I think if you buy in here, you're giving into FOMO and you're basically a fool, because this is where institutions are starting to trim their buy positions that they opened down here at the beginning of June, and they will allocate this cash to better buying positions at lower prices. So I would not be buying the market here. I have to continue to confess that, and I do personally believe that we will be trading back down near the fresh lows in a very short period of time, perhaps by this time next month, because September, just to let you all know, is historically a very weak month for the stock market.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement is